What's up, guys? It's Clint Coons here, and in this video, I'm going to be sharing with you strategies specifically for California real estate investors or people who are considering investing in California. Because the reason that comes up a lot when you live in California, you're investing there, you're investing out of state, or you're planning on investing into California, is that dreaded franchise tax. You probably heard this before that, hey, if you live in California and you set up a limited liability company in North Carolina, Indiana, Texas to hold your rental in that state, you're going to have to pay California $800. Or vice versa, if you want to set up an LLC in California, California is going to charge you $800 for that limited liability company. Well, I'm going to show you that that information you've been told is completely wrong, false, that there is a way around that you won't be subject to $800 if you just adopt the little strategy we're going to be talking about. It can completely change your entire asset protection as well as your tax planning when it comes to holding real estate to really drive those costs down. So what does that look like? So let's assume in this scenario that you are a California resident right here, and you decided to go out there and start investing outside the state of California because, of course, it's cheaper in other states. And so you're in Oklahoma and you pick up 3 properties in Oklahoma. Now, ideally, if you want a good structure to protect your assets, and you've seen this on many of my other videos, what you should consider doing is creating a limited liability company for each of these properties that you own there. Now, those 3 LLCs, obviously we don't want to hold those in our own name. That is, I'm not going to make you the member as a California resident of these 3 limited liability companies, because that California is going to assert that that's $800, $800, $800. Now, depending on where you're investing, I mean, many times I tell people, hey, if you're investing in California and that property is bringing in $30,000 a year, $800 isn't that much. So set up your LLC and quit complaining. But then you go to another state and you're only bringing in $5,000 a year. Oh, now $800, that's an awful lot. So we want to make sure we can minimize that. Now, I don't want to get hit with those, so what am I going to do? Now, if you watch many of my other videos, I tell you, do this. You know, one of the strategies we want to look at is we want anonymity. So we'll create a Wyoming limited liability company, and we'll have each of these LLCs here owned by this one Wyoming LLC. Okay, great. So what I've accomplished for my California client now is I've got 3 LLCs that protect the properties. I've set up a Wyoming LLC that owns each of these 3. So what that's doing for me, it's ensuring that I have anonymity, that if somebody looks at this LLC, they're not going to see me. If somebody looks up my name, they're not going to know that I own 3 properties. Why is that important to you? Well, if you live in California, it's a highly litigious state. There are more attorneys in California than there are in any other industrialized country. I mean, in fact, in California is the only state that I know where they allowed a monkey to sue a human. Yeah, you can look this up. Talk about something that's the craziest, off the chart, you would never expect to happen. Well, it'll happen in California. So we want to make sure we're protecting you. So if you did this type of strategy here, you brought this to your local CPA, your CPA is going to say, you got a Wyoming LLC? That's another $800. And they're going to say you have to pay 4 franchise taxes in that state because all 4 LLCs are doing business in California. Wait, I know they're not. It's Wyoming and Oklahoma, but it doesn't matter. That's the way California looks at it. So what do we need to do then to eliminate that tax if you're living in California and you're investing outside of the state? Well, it's really simple. What you should create here is a Wyoming statutory trust. I'm just going to call it a WST. Put in place a Wyoming statutory trust and have your Wyoming LLC owned 100% by the statutory trust. So what is a statutory trust? I've got a few videos on how to set up a Wyoming statutory trust, but I'm just going to make it real simple for you. A Wyoming statutory trust is a business trust. It's a business entity that you register with the state of Wyoming. And when you set up a trust, you have to have a trustee and you need to have a beneficiary. Now, the beneficiary, of course, is the owner of this trust. So typically when we're looking at using statutory trust, which I'm going to show you another way to use this tool if you invest in California here in just a moment, so stay tuned for that. But when you're typically setting up this trust, one of the things that we want to do is create the trust with anonymity. Now that's important if the trust is owning real estate or something else and it's doing something active where that is a concern of ours. But in this case, it's not about anonymity. This trust is all about removing you from an owner of any of these limited liability companies, so you would never list that you own personally, manage or control these companies as an individual. So when I set up this Wyoming statutory trust, I'm going to list my client here as the beneficiary of the trust. Now, unlike other scenarios like I'm about to show you, when it comes to setting up this trust, I don't need anonymity. I don't need it in this context, so I don't need to go to the extra length to create anonymity for this trust, so I can be my own trustee as well in this type of plan. Because again, the trust is just, think of it as a blocker entity. It's just there it's my tax-free entity. I don't want to pay taxes. That's what I'm using this for. So this Wyoming LLC is owned by the Wyoming Statutory Trust, and then you are the beneficiary of that Wyoming Statutory Trust. So what could happen? If somebody looked up your name, they could find that you're a trustee of this trust. And I had somebody ask me that. Well, they said, Clint, if they know that I own the statutory trust, then they know I'm going to own all of this. Impossible. And here's why. Because that Wyoming LLC, when you set this Wyoming LLC up, Wyoming does not collect any information on who the members or managers are. So when we make the statutory trust the member of this Wyoming LLC, that information isn't public. No one knows that. So if you looked at the statutory trust, you say, well, what does it own? You get nothing. You don't see anything. If you looked at the Wyoming LLC and said, well, who are the members or managers? You don't know because Wyoming doesn't collect any information there. So this type of strategy, what you're able to do is you're able to create your asset protection here. You've got all your anonymity from here up, completely protected, completely private. You're invisible now when it comes to owning these assets. And then you put this in place, and all it's doing is holding your beneficial interest or your membership interest in that Wyoming LLC. It doesn't really matter if somebody knows that I have a statutory trust. What are they going to get? It doesn't own anything. It doesn't tell them what I have. So this type of plan, I think, is great for those people who live in California, invest outside of the state. Now, what happens if you invest in the state of California? Maybe you live in California, you're investing in California, or possibly you live outside the state and you hold real estate in California and you want to protect it. Now that's where we have to get a little more creative in our planning, and we go back on a more traditional route to what we're doing. Okay, so if you don't want to go the LLC route, and that actually came up in another client question that I had. They had a couple of commercial properties in California and they wanted to know, hey, should I use a strategy that I'm about to show you? And I said you could, or you just stick it in an LLC because they're commercial properties. The LLC is very well known structure there, and it's only $800. And based upon the income you're bringing in, I mean, you're kind of tripping over pennies on your way to dollars if that's your thinking. So let's say I got a residential property in California and I want to protect it and I don't want to pay the $800. So in that case, what you need to do is you actually need anonymity. So I would first set up a Wyoming LLC right here. Okay, this Wyoming LLC is going to be a trustee LLC. And so what do I mean by that? It's going to serve as a trustee of my Wyoming statutory trust that I create. So I create this Wyoming statutory trust with the trustee LLC over there, and then I'm down here as the beneficiary. So this way, if somebody looked up this trust and they wanted to see who's involved with it, I'm not going to be showing up there because Wyoming only collects information on the trustee of the trust, and the trustee is going to be a Wyoming LLC. And as I already shared with you, no information is shared when you're using a Wyoming LLC with the Secretary of State. So this privacy right here, by having privacy right here, it gives you default privacy down here. So now we've created the structure that we like so we can be invisible. Then we take that structure right here and we're going to foreign file it. You have to do this. You have to foreign file in California. And the reason why you have to foreign file this in California is because it's actually going to own real estate, not the trustee LLC, just the trust has to foreign file there. And so again, we foreign file in California, the same information gets disclosed. Here's the trustee, here's a trust, your name's not on it. And then you're going to put your property into that Wyoming statutory trust, which again is a business trust. Now, as I was stating, business trusts, okay, are not subject to the $800 franchise fee or tax, excuse me, not a fee, it's a tax in California. LLCs are subject to the tax, corporations are subject to the tax, limited partnerships that are not disregarded limited partnerships are subject to the tax. Statutory trusts, business trusts are not subject to the tax. So if you want to eliminate tax on your structuring with your business entities, you want asset protection, then consider using business trusts like a Wyoming statutory trust to hold your California real estate. Or if you're investing outside the state of California and you're a resident of California, then use that Wyoming statutory trust as a blocker entity, because you're only going to get taxed, or you're only going to have to pay that franchise tax on LLCs that you own. And we're going to make sure you're not owning them, because we're going to have that business trust as that blocker entity. Hey, if you'd like to learn more strategies like this, talking about land trusts, corporations, and tax planning for real estate investors, be sure to check out one of my tax and asset protection events. I teach them every few weeks on a Saturday. It's one full day of just non-stop content showing you how to put together structures like this and many more for your real estate investing. I hope to see you there.